You're listening to the Generational Wealth Through Commercial Real Estate podcast. Your host, Will Smith, is a former NFL player that found his passion in commercial real estate. Every week, you will learn from industry experts everything you need to know to get started investing in commercial real estate to build generational wealth.
Thank you for tuning in to the Generational Wealth Through Commercial Real Estate show. I got a really special guest lined up for you today. We're going to be talking about something completely different than what we normally talk about on this show. But before we get into that, if you're watching this show for the first time, go ahead and do me a favor and hit the subscribe button. And if you haven't left a review, go ahead and leave me a review. Make it an honest review. I used to ask for 5-star reviews, but hey, I don't even care at this point. I want to know if you like my show or if you think my show is trash. Let me know. All right, and that's going to allow me to keep bringing on rockstar guests like I have today. Today's guest is Neal Isaacs. He's a business broker with VR Business Brokers. He owns the region around the Raleigh Research Triangle area, and he's been doing it for 4 or 5 years now with this company, and he's killing it. Neal, how you doing today, man?
I'm talking to you, brother. I'm doing great, man. Thank you for having me today.
Absolutely, man. I'm excited to have you on the show. We haven't talked to anybody on the show about what it means to buy a business or even how you buy a business. So, if you would, man, give us a little bit of a backdrop on who you are and how you got to where you at now.
Sure. Well, thank you for asking. So my story ties into who I serve and why I serve them. And I've been in this market for 16 years, and I moved here and I opened a small retail business. Mm-hmm. So I leased space. I did not own my space. And I invested in that space, and I built a business. And then several years later, I didn't want to do it anymore.
Right.
I was making money, and I wanted to sell my business. So unlike a lot of your clients, I didn't have tangible real estate, but I had a cash flowing business.
Right.
And the challenge is I couldn't put a sign out front because I got customers, I got a landlord, I got employees, so I had to do it secretly. Lo and behold, I met a business broker, and it kind of reminded me of that guy in Pulp Fiction. They show up in the middle of the night, and they're like, you got a problem? I can solve it. We can take care of it. And I just thought that was a fascinating role. So I ended up selling my business, and that was 2008. And just going through that process of marketing it and figuring out how to do this transaction, to deal with the landlord, it was very enlightening to me. And fast forward all this time later, now I own the VR Business Brokers office for the Raleigh-Durham market. VR is a 40-year-old company, and we've served the Triangle market since the 80s.
Yep.
VR sold more business in the world than anyone. And I help people like I was in that situation a decade and a half ago to move on with their options for exit. So that's kind of who I am and what I do and how I help people.
Yeah. So for the person that's listening to the show right now, and they may have a business and they may be feeling trapped of, how do I get out of this? Yes, it's making money, but I don't want to be running this business for the rest of my life. What would you, what advice would you give them around, getting the top value for their business? Because we understand in real estate, to get the top value, you want to increase the revenue, decrease the expenses, which at the end of the day, increase the NOI, which translates to the value of the property. How does that relate? When you're looking at a business opportunity or when a business owner is trying to sell his property and get the most for it?
Well, it's very, very similar, Will. It's all about the bottom line. And owners come to me all the time. They brag about the top line numbers. I put up this many millions of dollars, and I've learned to slow down and not get too excited when I hear these big top line numbers. What the buyers care about is what the business earns. What can you prove that you earn? And just like real estate, what could the bank finance your business for? So that's where we really have to answer your question directly. We got to find those earnings. Be able to prove that the business makes money. We look at the tax returns, look at the profit loss statements. So owners can focus on building a big business that is profitable, where they can show where the monies are.
Yeah.
And they don't always have to pay a lot of taxes. It could be through depreciation or interest, or there's all kinds of ways that owners can work with their accountants to save on taxes, but we got to be able to find those earnings.
Right. And, what you probably see a lot of is, owners that are basically trying to show the business is not making any money because they don't want to pay the taxes, but it's like a catch-22. That hurts them if they ever want to sell the business, right?
100%. And, we're living through the COVID era right now. And the look back period is like 3 to 5 years. So you had a lot of these owners that were like, eventually I'm going to sell my business. And leading up to that time, maybe I'll show some earnings right before I sell my business.
Yeah.
But all of a sudden something unexpected happens. Maybe it's COVID. Maybe somebody gets sick. Maybe the grandchildren are born and you want to move to Florida. We're automatically going to start looking at what were the earnings last year and the year before. So the best thing to do is to pay the taxes, to show that, hire a good accountant, mitigate tax exposure, but do it in a way that we can tell that financial story and find the earnings.
Right. So, want to talk to real estate. If somebody's buying a business, is the business more valuable if they own the real estate that is sitting in? And, how do you guys equate value with the real estate when you're valuing a business?
Excellent question, Will. So I think the most important thing to realize with real estate and business ownership is they're two separate propositions. Commonly, I meet owners and they start like me and they're renting their space. They start to make some real money and then they buy property.
Yeah.
They need to be paying themselves not just rent, but a market rent.
Yeah.
Moving profits into real estate is an extremely wise, efficient way to accumulate wealth, as you know. But when it comes to unwinding that stuff, a business owner with real estate has a couple of options. They can sell the business and keep the real estate and just become a landlord. And that's why that market rent is really important. They can sell the business and the real estate as two separate transactions at the same time. Or they might be doing like a sale and lease back where they do intend to sell the real estate, but they want to sell the business first and kind of get a new tenant in there and show a history of cash flow and then go to an investor to buy the other piece of it. So those are a few of the options, but you got to get that rent correct, market rate, because when we talk to an owner and they own a business in real estate and they're showing all this money, but they're not paying themselves rent, the question becomes, are you going to give the real estate away or do you expect the next buyer of your business to pay rent? And the answer is always yes. Obviously, we expect rent.
Yeah.
So you got to pay yourself rent. And that's a really great way to lower the business profits.
Yeah. And
so there's a balancing act there.
Yeah. So in that situation, do you recommend when somebody's saying, hey, I'm tired of leasing, I want to go, it will make more sense for me to go buy my own building. Do you recommend them create an LLC that holds that building that they're paying, lease payments to?
Yes. Smart business owners have smart advisors, and that's a common recommendation from either their their attorney or their CPA or both to have a separate real estate company. And you pay your rents. And typically when we do evaluations, we're looking at the business tax returns and then the real estate tax returns too. And we're seeing how those monies flow between the two.
Yeah.
There's also some liability protection, right? So a customer walks in, they trip on the way in.
Right.
If it's just one big company, they're taking your business. Now they can take your real estate. But if you have that separate company, there's a firewall there.
Right.
Or if you have multiple companies, if you have an empire of companies, you're putting things in little envelopes to protect yourself.
Yeah. I would imagine that's what most wise or savvy business owners do. Now let's take a moment to actually look at if we're out here looking at, well, first off, where do we go to find business opportunities to buy? And then once we find these businesses, how do we evaluate them? How do we know if it's a good deal or a bad deal?
Yeah. To find for sale businesses, you can call listing brokers, business brokers like myself, and see what they have. There are listing sites on the internet, but they're more advertising sites. Unfortunately, the business brokerage world is not as formalized as the real estate brokerage world. So there is no true multi-listing system for business transactions. And I love exploring this topic, real estate versus business deals, with you and real estate professionals, because there's so many similarities, there's so many differences.
Yeah.
Business transactions, small businesses, they're private transactions. So it's hard to get really good data for sold businesses, unlike real estate transactions where everything's recorded.
Yeah.
That also opens up a conundrum of, if an owner does a price change, there's no recording of that. That's different than real estate, right?
Yep.
So to answer your question, the businesses are out there, they're for sale. Sometimes you just got to call some owners and find out if they want to sell. But business brokers are great sources of for sale businesses. Your competitors may want to sell their businesses if you're in an industry associations, things of that nature.
Yeah.
I'm affiliated with the International Business Brokers Association. That's our association that guides us on ethics and training. They list businesses through their site as well. Those are some good resources to find for sale businesses. In regards to valuation, it comes back to what we talked about earlier. It's all about how much money the business makes. And that can be a little trickier probably than establishing what real estate makes. But once you know what a business makes, it's not too different than an NOI calculation, but we're just comparing it to other businesses sold. So it's a market multiple approach.
Yeah.
One more thing, Will, while we're on this subject of business versus real estate, I know with real estate, it's more about future value and cap rates.
Yep.
On the business side, especially small business, we're more focused on historical earnings.
Okay.
There's less of this, you could make this much more in the future, and there's more of this, I don't know what you're going to do with it, but historically, we make $100,000 every year. If you don't screw it up, you're going to make $100,000 next year. If you pay me 3 times that, you'll get your money back in 3 years.
Gotcha.
That's a more common approach for business. And I think with cap rates, it's more, you could do this and this and this, and then, there's more future value consideration.
Yeah, that's a really big difference.
Yes.
Yeah, if you think about it, like if I'm buying a multifamily building and I'm looking at it and let's say it's a 7 cap, and well, obviously, that's hard to find, but if I see a 7 cap and I'm buying that and I see, okay, the rents aren't pushed like they should be, and they're charging way too much for this, charging way too much for that, so you can reduce expenses. But a building that I'm buying for $7 million, I could sell for $9 million, 3-4 years later. It's not the same on the business side. I'm just trying to sum up what you said, 'cause I want to make sure I got it, and I want to make sure my listeners got it. If the business is making $1 million a year and it's been doing it for the last 4 or 5 years, then the owner is saying, look, if you buy this business, you're guaranteed to make $4 to $5 million a year. Well, $1 million a year if you don't screw up and just, blow the business up, so to speak. And you guys put a multiple on that.
Yep. The multiple is on the earnings. And to use your analogy, that apartment building, you could do poor management, but you still have an apartment building, right? Tangible. And I think that's why people are more apt to place a future value on it. Whereas with a business, if I'm selling you a brand, this plumbing company, historically, people know this company and they believe in this company and the phone rings because we do a good job. Yeah. That's a little more fickle. And so that's where we're looking at historical performance.
Yeah.
And the upside is, I think you'll find you can get a better return on investment. The multiples, to get a 3-time multiple, that's, if you put that back to a cap rate, because cap rates and multiples are inversely, it's kind of the same thing. It's like a 33%.
Yeah.
If you sell a business for 3 times, it's like making 33%. That's pretty attractive, right? You don't see those type of multiples in real estate. But I think there's more risk there because you're not getting a building. You're getting this intangible thing that historically has made money.
Yeah.
And I think that's the allure of business ownership is we could make lots of money with essentially this brand, this intangible idea.
Yeah. No, that's a really, really good differentiation of one asset over the other. And they're both assets, because it kicks off money to you. So let's talk about for a minute, on the real estate side of the game, we got a lot of value add guys. We like to buy C class, B minus product and A, B neighborhoods where we can, we know we can force appreciation and force value. Is there a strategy like that around the business world where people go and just buy businesses like that?
There is, and it gets into the different types of buyer types. When we take a business to market, we're looking for that financial buyer who wants to basically step into that opportunity and buy a job, if you will, and is going to own or operate the business. And they need every part of that business. They need the support and the training and the admin, and they need everything there. And they're buying that whole thing. There are strategic buyers. Maybe I own, a bunch of, just stay on this plumbing companies. I own plumbing companies all around the triangle, but I'm not in the triangle. Yeah. And I would like to buy a triangle plumbing company. And that's a piece of my puzzle. And I don't plan to spend my own hours there. That's more of a strategic buyer.
Yeah.
And that buyer it gets a little wanky there. That buyer may pay more because they understand how much it makes, but they really need that piece of the puzzle.
Yeah.
Or they may actually pay less because they're going to say, well, I don't need a lot of the stuff that you're offering, right? A lot of the stuff that you're offering, I'm already doing that over here. So that doesn't bring value to me.
Yeah.
So we typically will value a business based on that financial buyer, knowing that they need the whole package. And then we let the strategic buyers, we hope to find the ones that need that piece of the puzzle, but it's a more narrow piece of the puzzle to find. It's harder buyer search for that.
Right. So when you're buying multifamily, it makes a lot more sense to go bigger versus going smaller, because then you can have on-site management. You want to be around that 100 unit mark, for those reasons. That's where you can start to scale. How does that relate to the business buying world? Is it like a certain dollar amount where you can bring in management, hire a CEO, and all that? Like, where do you want to be when you're looking at a business if you want to kind of have that hands-off approach?
Yeah, great question, Will. And I hope you can hear me because you're coming in now, but I could hear your question. Yeah. And I'm going to get a little bit technical with you for a minute, but I talked about these Main Street businesses, owner-operated businesses. Their owners are earning $50, maybe $100, maybe $200,000 a year, and they're working in the business. And the business, if it's making 50 or 100, it probably doesn't support a manager.
Right.
But once you get a business where the earnings, we call that seller's discretionary earnings. The owner's working the business, they can do whatever they want with the earnings. They choose to pay themselves a salary. But once you get over that $200,000 a year, owners tend to install managers.
Yeah.
Now the business is no longer sold on this SDE, the seller's discretionary earnings. These larger businesses are sold on what's called an EBITDA, so earnings before interest, taxes, depreciation, amortization. All you need to know is the business is sold with management. The earnings that are represented include management salary. So everybody's buying this business based on a multiple of EBITDA, understands that they will have to put less time into it because management installed. They will get a higher multiple of that EBITDA.
Yeah.
So it's really $250,000 plus in earnings that you start to see these in management installed EBITDA driven businesses, and buyers will certainly pay more, a higher multiple for these businesses that have gotten to that stage.
Yeah. And so those businesses I guess they're worth more because of the hands-off, component of it.
Buyers will pay more for a business that makes more, many times more.
Yeah.
So just to throw some numbers out, Main Street businesses may get 1, 2, maybe 3 times earnings if they're earning $50, $100, $150,000. But these businesses that are throwing off $250,000, $500,000, $1 million a year in earnings after the manager's been installed, they're going to get 3, 4, 5, maybe more times.
Yeah.
So it's you're climbing that multiple ladder. And a common strategy with the private equity firms, we talked about putting puzzles together. They'll buy up all these smaller businesses at a 1 or 2 time multiple.
Yeah.
And now they've got a big business, and then their whole plan is to sell that for a 4 or 5 time multiple. So they're getting in, then they're getting out. Does that sound like a multifamily investment
It
unit?
does.
It's the
It
same
really
strategy.
Yep.
But you got to have big money to play that game. You got to install management, so it's more of a self-operating business.
Yeah. So, so really then, if you look at when people are buying these large multifamily, they're syndicating money from a group of investors. So somebody that's savvy, business minded, they can syndicate money and go buy a large group of business in a certain area and do that same value add strategy then.
Yep. We call it private equity. There's a lot of that out there. You're going to have really good management. And the business is going to have to be of a certain caliber that it can afford to have good management. And candidly, that's what I see most business owners struggling with.
Yeah.
They build a business, it's doing great because they're pouring their heart and soul into it.
Yeah.
Then they want to say, I don't want to work so hard. They put a manager in. Nobody works as hard as the owner.
That's right.
Business starts to come down.
Yep.
But for those owners who have really committed to finding good management, it adds, you asked earlier, what can an owner do to add value to a business? Installing and good management and the processes and procedures that are needed to have good management, it makes so much value for a business because now you have investors that are very attracted. They can make money without spending time.
Right.
Sign me up. That's what everybody wants, right?
Yep.
That's why people are attracted to real estate.
Right. No, that's they're both similar in that capacity and but yet different, so that's
Very
definitely
different.
interesting.
Yeah.
Okay, well, let's get back on real estate. So self-storage and hotels are real estate businesses. There's real estate component, but then there's also the business component of it that increases the value or decreases the value of that asset. So let's talk about that, man. Is that something that you guys look at?
And I wish I could find them. I would look to someone like you. So it's interesting, this spectrum from a purely owner-operated, no real estate. The owner is kind of the business, all the way up. Then you get into these middle-sized businesses that we're talking to, and then all the way up to a commercial-heavy business that maybe there's some people involved in. The blend of real estate to people is shifting more towards real estate, but still making money. And the hotels and the storage units kind of fall into that type of category. It's more of a commercial real estate investment type play. The financials behind it are extremely important, but I mean, they should hit certain KPIs there when you're looking at real estate investment. But I don't see a lot. There's a lot of specialists that are just focused very tightly on the hotel, the self-storage market. Yeah. There's definitely brokers out there that are specialized in that. And they tend to be business broker / commercial real estate. Yeah. Because it's kind of the best of both to have that.
Yeah. No, I've been looking at self-storage as an asset class to invest in. And, if you can go in and find somebody that's a mom and pop owner.
I've studied that too. And a lot. Yeah.
Go ahead, man.
Well, I was going the same direction. The value add is to find the mom and pop owner to install technology. So you got an ATM essentially. Now you've reduced your payroll costs and you make the money without the expenses. It's a smart investment option.
Absolutely. And obviously nobody wants to think about hotels with everything that's going on with COVID. But I've interviewed some hoteliers, that they own multiple hotels, And they would tell you, man, if you can buy, the economy class hotels like the Studio Sixes, Motel Sixes, they don't look attractive when you think about them. You think of, the rings where all the drugs and stuff are happening at. But from my conversation with them, man, it's like those are the best ones. It's not really what people think they are. So that's definitely something for people to think about. That's
on sale now.
Yeah. So, if somebody has, let's say they have $100,000, right? And they're trying to decide between, look, I can go buy this plumbing business that's, worth 300, 400,000, or I can go, put my money in a syndication and have a piece of ownership in it. Both of them, one you're going to work for, you're going to be buying a business, and the other one you're going to be hands off. Which would you say makes the most sense? Because you're on the business side of it. So, let's see what your thoughts are on it.
Well, I've listened to some of your other podcasts, and I remember some of the folks that you've interviewed before, they've talked about the value of partnerships.
Yep.
And syndication is all about partnering with other people.
Yep.
And if you can leverage those relationships to have a true working partnership, you can probably buy something bigger. You will make a smaller return on your investment. Yep. So it kind of depends on your mindset going into it. Some people, they want to control their own destiny to the nth degree, and they want to just make their own money work as hard as they can for themselves. And that's the type of person who would want to be a sole shareholder in a business. Right. And maybe the pie, they'll have more of the pie, but maybe it won't be as big of a pie, right? But they have complete control over that pie. So I would say it goes back to the mindset of the investor and how much control they want.
Yeah.
What they do with that 100,000. Either way, one thing to think about is, the bank can be your partner. You can take that $100,000 and potentially buy $1 million business. Yeah. If you partner with a bank and get an SBA loan, you've got 10 years for that debt service, or 25 years if there's real estate involved. So for that person who wants to control their own destiny, I would direct them probably to an SBA banker or somebody who can help them make that money go farther by partnering with a bank. Still keep the ownership. Yeah.
Now let's talk about that for a moment, because it broke up a second there. So what are the requirements, or what are the, I guess, the rules when you're doing an SBA loan?
Sure. So I'm not a banker, but I help my clients with SBA is the primary vehicle for small business acquisitions. And the reason is the SBA, they're focused on that goodwill piece. So before we talked about like buying a plumbing company, it's just maybe you get some trucks or something, but you're getting this promise of making money, of cash flow.
Yep.
The SBA is designed for that. And the rules, it's extremely complicated, and the rules change a lot. But forget about the PPP and all the new stuff that's happening with COVID. Those are new temporary financing vehicles to help owners get through crisis.
Yeah.
But the traditional 7A loans are a major vehicle for business acquisitions. And currently, an owner can put down as little as 10%. It works out to be more like 15% because there's some other fees and working capital. Yep. Just think about 15% and leverage that for maybe $1 million if it's 10%.
Yep.
And that owner will have approximately 10 years, possibly up to 25 years, depending on how much real estate's involved, to pay that loan back. And again, the SBA, they love it if there's tangible assets that they can hold collateral on.
Right.
But if the business has a history of cash flow, they will be comfortable for the right buyer, the right business, to write that loan and be a partner in that deal.
Nice. Now that's a good way. Because you're not. It's hard to find real estate that you can put the 10% down on. What I guess you can do that with self-storage though, because it is a business. So that's one that you can get away with that in it, right?
Absolutely. The finance. I think banks love to finance self-storage. It's really hard. COVID affects everything, and it's it's affected banking as well. And I know the SBA bankers are really getting more conservative.
Yeah.
They're dialing it in on what they'll accept. And they always want to look at what they call interims, which means how well have you been doing the last few months, which for an owner going through COVID, in most cases, it's like not what you want to see.
Right.
You know what I mean? So,
right.
But deals are still getting done. And there was some incentives with CARES Act that are ending now, but they were giving 6 free payments for SBA loans.
Yeah.
So that there was really some incentives going on there for when the CARES package was released. What happens in the future, we don't know, but there's a lot of money going out right now.
Yeah, yeah. And obviously you're not a banker, but do you know about how long the process is from start to close with SBA?
Yes, I do, because I've done a lot of them. In general, it's 45 days is the quickest, and it's more like 60 or 90 days, especially in the more complicated deals.
Yeah.
And I would say it's probably taking even longer now because of COVID slows everything down.
Yeah.
And speaking of which, a small business deal, if you look at the averages, it's around 6 or 7 months. And then if there's financing involved, it's around 9 months total. Add a couple months for financing. It takes a long time to sell a business.
Yeah. No, that's real good points there. Now I just got a couple questions for you. I always like to do the lightning round at the end, so let's go ahead and jump into that.
Okay.
All right. So what's the best book you've read the last 12 months?
The 4-Hour Work Week by Tim Ferriss.
Yeah.
I love Tim Ferriss. That's a great book.
Yeah. No, that is a great book. That is.
Yeah.
What's the best advice you've ever been given?
Plan the work and work the plan.
Nice. Like it. Simple. What's some rituals that you've implemented that's making you a better investor or person in general?
Well, I've got a 1-year-old child, and it's my first child, and I'm leaning into this new dad thing. It's so much fun to have a kid. As an entrepreneur, it has reshaped all my perspectives, what's important to me.
Right.
But I block off 4 p.m. to 5 p.m., maybe 5:30 p.m. to spend time with my child almost every day. And that's a real challenge as a business owner, but it's priorities. And the time that I spend with him, where I unplug and just say, I'm going to be a dad right now.
Right.
It's hard to do. It's hard to turn down appointments for that time, but it definitely energizes me and gives my priorities in line. Yeah. So just that focus to say, as an entrepreneur, this is one of the benefits of entrepreneurship. You can control your schedule. You can focus on the things that are important to you.
Right. Absolutely. What advice would you give your younger self in regards to investing?
Get comfortable with risk. When I think back at the investments that I've made that have paid off, I appreciate being young and dumb and naive enough to think it would work out, right? Yeah. Because as I get older, I take less risk, and I think I have less opportunity. So easy to get stuck in your safe zone. Yeah. But if you can get comfortable with risk and just realize that you can only control certain things to best position yourself for a great opportunity, then you kind of have that confidence to move forward and take that risk. But you have to get comfortable with risk. Yeah.
I mean, if you're not willing to take risks, you're never going to grow. You're never going to succeed in life.
Just have a comfortable government job or flip hamburgers. We can all flip hamburgers. Yeah. It's very safe. Yeah. For now.
Yeah. And that takes me to my last question. What's the worst job you ever had?
That's a good question. I've enjoyed every job that I've ever had. I really have, because I feel like you can learn something from every job. But I will go with this. I worked on a car lot for 1 week, and I'm so glad I had that experience, because I learned what it's like to go to the tower, that you're really kind of in between the customer and management, and just learn kind of how the sausage is made.
Yeah.
And it was the worst job in a number of ways because of the grind and the pressure, but at the same time, it's just core sales. I really enjoyed seeing how sales happen just in a fly. So, but it was not the most fun job. I would love to go back and sell cars after I've retired just for fun.
Yeah.
But to rely on that to make a living, not as fun.
Yeah. I imagine that is tough. Hats off to everybody that's making it happen.
Absolutely.
Yeah, man. Well, all right, man, Neal, that's the end of the show. Tell my listeners, how can they get in touch with you?
Absolutely. So thank you for your time, Will. If you want to learn more about me, RaleighBusinessBroker.com is my website. I'm on all the socials. It's Neal Isaacs. You can find me on LinkedIn. And I've got a YouTube page, VR Business Brokers of the Triangle. Lots of videos there for entrepreneurship and about business ownership and for business owners. So those are some great places to find me.
Well, we appreciate you coming on the show, man. You added a lot of value to the listeners today.
Thanks for what you do, Will. It's good stuff, my friend.
No worries.
Thank you for listening to the Generational Wealth Through Commercial Real Estate podcast, brought to you by Onyx Capital Investments. Onyx Capital Investments works with investors nationwide to invest in income-producing real estate in emerging markets. Connect online at www.onyxcapitalinvestments.com to learn more about what we're doing. If we have added value to your life, please leave us a review.